maybe in a lot of ways, I get the easiest job today, actually speaking after everyone's well-fed and they've gotten a little bit of sun outside. So I know the room is going to slowly trickle in, but maybe we'll get started to keep on time. And as a starting place, just in terms of, can I click this? It's buzzing. There we go. As a starting place, just talking about Madison's purview in the commercial real estate investment universe, as David correctly said, we've been in business since 2002, and we've been exclusively focused on the secondaries business, and more specifically what we call direct secondaries. And I'll come back later and talk about the differences between the direct secondaries model and what I think most people historically have associated with the secondaries business, which is the more traditional fund-oriented private equity style secondaries model of buying out investor interests in funds. And there's a lot of similarities in terms of the investment philosophy between those two styles of secondary investing, but there are also some meaningful differences that we will come back and talk about. As we stand here today, Madison Real Estate is about $8 billion of AUM. We have offices in London, Frankfurt, New York, and Los Angeles. We have over 90 sponsors that we've done business with, and it gives us an interesting purview into the commercial real estate environment because we are not an owner-operator. We do not buy properties, operate them, and ultimately sell them. We're a financial allocator looking to put capital into the hands of many of the other people that you heard from earlier today that we think are best-of-class operators across their various sectors. And the reason that that's interesting for today's conversation is it gives us an interesting purview into the broader real estate environment because we're invested across asset classes, we're invested across geographies, and we're invested across sponsors that allow us to see real-time data on what's happening in the commercial real estate environment. And with that, I may actually spend a few minutes just talking about the general house view of Madison on what we're seeing in commercial real estate today, and then come back and talk a little bit more about the direct secondaries business and how a lot of what's happening in the current environment is influencing the development of secondaries as an asset class, which is something that has become very top of mind for a lot of investors over the last 24 to 36 months. This is the state of our world. This is maybe a bit of a sombering place to start after lunch, but if you look at what's happening around us, there's no doubt that we are in a period of significant global volatility and dislocation. It really started with the onset of the COVID pandemic. Now it's turned to global supply chain disruption, the war in the Ukraine, geopolitical risk in other parts of the globe, rising interest rates, an inflationary environment across some of the major economies of the world. And there's no question that that has implications to what's happening in the current state of the commercial real estate environment. And it has very specific implications to the price of liquidity in the current environment as well. And I think that definitely dovetails with what we're seeing